Hi guys, it's Stock Curry. We just had earnings from Google, Microsoft, Shopify, Visa, and with all the madness with the earnings, I forgot the Fed was raising interest rates on Wednesday. Let's get into it! To get things started, Microsoft missed estimates on both earnings and revenue, and the stock jumped 4% after hours. I don't know. Okay, really, the stock was down 2% after hours, and then they came out and they gave a really rosy forward guidance, and that's what brought the stock up from down 2% to plus 4% by the time the after hours closed. So that's why Microsoft was up. Terrible earnings, but great forward guidance. When it comes to Alphabet, which is Google, same exact thing. They missed on earnings, they missed on revenue, and the stock was up 5% after hours. I don't know. Earnings per share was $1.21 versus $1.28 expected. Revenue was $69.6 billion versus $69.9 billion expected. YouTube advertising revenue was $7.34 billion versus $7.52 billion expected. Google Cloud revenue was $6.28 billion versus $6.41 billion expected. Basically, Google missed on every single number. And their revenue growth dropped all the way down to 13%. Now, they're still growing revenues, but only at 13%. The last time Google's revenue growth was 13%, or around that number, was 2019. And you might recall what happened in 2018, 2019. It was the last time we had a recession. Go figure. Anyway, Google stock was still up 5% after hours. I don't really get it. The only thing I can guess is that analyst expectations were for Google to have these really low, bad, awful numbers. And the street, Wall Street, was actually expecting Google to even miss those and come in much, much lower. And since Google only came in a little bit lower, Wall Street was like, okay, good. It wasn't horrendously, terribly bad like we thought. It was only really, really bad. So let's just go out and buy the stock. I don't really get it. I don't know what's going to happen on Wednesday, but I'm happy because I bought some call options right before the market closed. And with the NASDAQ up 1.4% after hours, I'm hoping those call options are going to pay off. We'll see. We also had Chipotle report earnings, and Chipotle killed it. Revenue came in a little bit lower than expected at $2.21 billion versus $2.24 billion. But earnings per share was $9.30 versus only $9.04 expected. The reason for that is because Chipotle was able to raise prices higher than their costs went up. So as a result, their profit went up. And Chipotle also said they're going to raise prices again in August. As a result of all of this, Chipotle stock is up 9% after hours. Now, of course, it wasn't all rosy today. We had some huge warnings from companies yesterday that caused stocks to go down significantly during the day. So let's talk about those real fast. We had Shopify stock drop 14% after the company said it was going to lay off 10% of its workforce. And as I mentioned in yesterday's video, Walmart also gave a profit warning, and that stock dropped 8% today. It also brought Target down and Amazon as well. Now, an interesting note that this article points out is that America's warehouses are almost out of space. Their warehouses are full. This, to me, is a big red flag that if the warehouses are full, that people are buying even less goods than we're currently seeing. So we may end up with more markdowns to come. This is probably going to hurt producers a lot, since companies aren't going to have to buy as much product since they already have a ton of product in their warehouses. I mean, really, where are they going to store it? So I think this is going to be really, really bad in the future. I don't think this is the last profit warning that we're going to see from retailers. And I think it's fair that with Shopify laying off 10% of its workforce and Walmart giving a profit warning, Target previously gave a profit warning, I think it's fair that Amazon stock is down. Amazon reports Thursday after the close, along with Apple. And if you remember what happened the last time Amazon reported, they had a significant hit because their retail sales dropped significantly on Amazon.com. So I think it's fair to think that Amazon's retail sales are going to drop again, and they're going to have another significant hit to their share price. I don't think that's a stretch or too far out of the question. Amazon's earnings are going to be a major problem for the market, but they might be extremely overshadowed by Apple reporting on the same day, which of course is a much larger company, largest company in the US. We also have the GDP, which could put us into a recession on Thursday. So again, Amazon and Apple earnings could be overshadowed by that. And Wednesday after the close, we have Meta reporting as well as Ford. Before the open, we got Shopify. Of course, all of that could be overshadowed by the Fed meeting. It's just crazy madness. I have no idea what to make of this week. There is no possible way to speculate what the market might do day to day. Now, I did take a gamble today and bought that QQQ call, but even I told the people in the Discord, I'm like, this is a total gamble. I'm just guessing just purely from the fact that Google stock is completely beat down, and I think it's going to rise. I think Wall Street is factoring in significant losses, and I don't think it's going to be as bad as people think. It looks like that was in fact the case after hours, but we'll have to see how the market holds up tomorrow because earnings are out. Now it's all on the Fed. Of course, stock futures are up right now, mainly just due to Google, Microsoft earnings being really good. But with the Fed decision coming out on Wednesday, we've really got to watch out for this. It's widely expected that the Fed is going to do a 0.75% interest rate hike or a 75 basis point interest rate hike. And if they do in fact come out and do what they're expected to do, we should see the market go up as it kind of breathes a sigh of relief, and that we did not get a 1% interest rate hike or a 100 basis point rate hike. I think the market will go up after the Fed meeting on Wednesday. That's my guess. So if we do in fact see the market rise in the morning due to the earnings from Tuesday night, and then we see the market rise even further because the Fed does what they're expected to do, I would not be surprised to see the market up 3, 4, 5% tomorrow. I think it's very likely we could see the NASDAQ up between 3 and 5% by the close on Wednesday. Now, all of that said, we've got more warnings and things to watch out for. I think Wednesday's run-up is going to be very short-lived. I personally think, and it's just a guess, that the market is going to absolutely tank on Thursday. And before I explain why, I want to point out what's going on in the gas and oil markets. Natural gas is hitting its highest level since 2008. And the biggest reason for this is that Russia is only delivering about 20% of the gas that they could deliver. And they're essentially saying they're just not going to deliver any more gas. Tough luck. And Europe is going to be in for a major problem this winter. Now, I also want to point out the oil prices. Don't get gas confused with oil. Oil prices continue to drop, and that means that gasoline, which is based upon oil, is going to continue to go down to the pumps, which is going to help the US economy. So overall, bad news for Europe, good news for the United States. Eventually, that bad news for Europe will spill over and hurt the United States, but probably not until this winter. Now, let's get down to a little bit more short term. I already told you I expect the market to go up on Wednesday from good earnings on Tuesday and the Fed meeting. Now, I also expect the market to tank on Thursday. Why? Well, first of all, the only major earnings we have on Wednesday is going to be Meta. And Meta, which is Facebook, is not that large of an impact on the stock market as it once was. So I don't think it's going to matter that much. What's really going to matter on Thursday is going to be the GDP print. The GDP for Q2 comes out on Thursday. And while a lot of people have no clue what it's going to be, a lot of people think it's going to be negative, I am at this point 95% convinced it's going to be negative. And here's why. We had some very odd stuff come out of the White House and Nancy Pelosi and Janet Yellen over this past week. Essentially, all three of these people have come together and they've said that if Q2 GDP is negative, don't worry about it. It does not officially mean we're in a recession. Now, technically, they are correct. If you go and look back at 2008, we had those 2 quarters of negative GDP, And at that time, it was the exact same narrative. The White House, economists, people on CNBC, they were all saying we're not in a recession. Yeah, we had 2 negative quarters of GDP, but we're not officially in a recession. I don't think the economy's in a recession. We're fine. We're good. It's temporary. We've probably already come out of it. Look at this strong factor. Look at that strong factor. Blah, 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 blah. And then, of course, in December of 2008, after the elections, conveniently, they came out and said, oh, we actually are in a recession. And yeah, we've kind of been in a recession since 2007. Oopsies. Well, now we're getting the exact same narrative from the White House. Now, I do want to be very clear about something, because there's a lot of misunderstanding out there on YouTube, Twitter, and elsewhere. The White House has not changed the definition of a recession. I want to be very, very clear about this. This is not a political play. Well, it kind of is, because they're holding off until the elections in November. But, okay, a little bit of a political play. But they're not changing the definition of a recession. I want to be clear about that. Widely accepted amongst stock market and economists, 2 quarters in a row of negative GDP is a recession. But here in the US, a recession has to be officially declared, and I can't remember the name of the governing body. It's something like the National Economic Advisory Bureau or something. I don't remember the exact acronym, but essentially it's a group of economists, and they are the ones, and the only ones, who can officially declare a recession. Now, I fully expect them to do exactly what they did in 2008. I expect them to come out and wait until December, and in December conveniently declare that we've been in a recession for all of 2022. That's my thought, my belief. We'll see what ends up happening, but I really don't think anybody is going to declare a recession on Thursday, even if the Q2 GDP print is negative. Now, here's why I think the Q2 GDP print will be negative. You would be a fool to think that nobody knows the Q2 GDP number until it's actually released. I mean, come on, guys, let's get real. The White House already knows, the Fed already knows, the Treasury Department already knows, Nancy Pelosi already knows. Come on, guys. Everybody already knows what the GDP print is except for us. And I think the reason the White House came out and released these papers, and the reason Nancy Pelosi and Janet Yellen all came out and said, don't worry about it if Q2 GDP is negative, is because they know Q2 GDP is going to be negative. If they saw the number and it was positive, they wouldn't have said anything. They wouldn't have released any statements. They wouldn't have tried to calm anybody. They wouldn't have done jack diddly squat. So that's why I think the Q2 GDP print's going to be negative, is purely for the fact that the White House and everybody else came out trying to calm and soothe people over before the number is actually released. I think it's like a huge red flag of what's actually about to happen. All of that said, I don't think the stock market is going to care about the official definition of a recession. I think the stock market is going to go, holy crap, we had 2 quarters of negative GDP, we're in a recession, sell, 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 sell! And that's why I think the market is going to tank on Thursday. Alright guys, I hope you enjoyed this video and got a lot out of it. Don't forget to hit the like button and subscribe if you haven't already. If you're on YouTube, go ahead and click the bell icon and click all so that you can get notified when I release my next video. I wanted to let you know I've got a little over 200 signups left on my Discord. Once the Discord is full, I will no longer allow anybody in. We are switching to a new system, so this is it. You have to be one of the last 200 and some odd people to sign up if you want to get in. Just $25 a month, and you'll get in on the trades like the QQQ call option that I opened today, and you'll find out all my reasons why I'm opening the trade so that you can decide if you want to jump in or not. I'll post the profits on that one tomorrow so you guys can see it. If you want to sign up for the VIP Discord, you can sign up at stockcurry.vip/getvip. That's stockcurry.vip/getvip. I hope you guys have a lot of success trading, and I will see you tomorrow.